Good morning, everybody. Happy Tuesday. We are going to get started in just a minute, as always. Very, very choppy markets for the past couple of days. Just quickly checking if you guys can hear me okay. And then we're going to start. All right, perfect. Okay, good morning, everybody. Happy Tuesday. It's April 29th. We got 2 more trading days left in the month of April. And, when I look at these markets over the past 2 trading days, so yesterday, Monday, and last Friday, it it has been increasingly choppy, and um, it just it just and I don't like to use the word feel because feel implies emotions and stuff like that, but it I'm noticing there's a lot of the odds aren't really here until we have a confirmation to see the next leg lower. And quite frankly, there's still a lot of risk of some sort of marginally positive news to push the market a little bit higher. So to me, a lot of this has to do now with month end. We've got obviously today and tomorrow left in the month of April. And that is going to be coupled with obviously tech earnings reports. Amazon, Apple, Microsoft, and whatever, one or two more of the big tech names. So I think that is going to dictate what this brings. And so one of the things that I mentioned yesterday in the members area is that we are seeing, and as this is based on a couple of conversations I had yesterday with some trading desks in New York. We are seeing some of the hedge funds kind of reluctant to press shorts because they want to kind of get through some of these Max 7 earnings first. I think, and we're going to cover this more in the Market Rover Inner Circle members webinar in about 15 minutes. But I think what we're going to see is the next leg lower is going to be more of a trickle, like a constant selling pressure once we get sort of these knee-jerk reactions. Because as much as, like, for example, right now we had Besson down the tape and some headline around Amazon, of scolding of Amazon, and the S&P just dropped, like, I don't know, 60, 70 basis points, the futures. You could equally get that move to the upside if we have some sort of a tariff announcement deal with, whatever they're saying, India and South Korea, whatever, right? Like, you can easily see that, but I think real commitment or real next directional moves to the downside, you're gonna have to get past, again, some of these Max 7 earnings reports, and then whatever the trigger will be for the next leg lower, if there is a next leg lower, it's our base case that we'll still have some lower to go over the course of months, not days. That it's going to be more of a systematic selling pressure because of a lot of investors. I've been talking about this to our members for literally exactly 12 months now. A lot of the people that I talk to, pension funds and big family offices, they have been marginally rebalancing U.S. assets, Max 7 stock, treasuries. Like, that's nothing new. That's been taking place for literally, from what we've been seeing for 1 year. We've been telling our members this. I know no one cared at the time, but this is now the result, and it's going to accelerate because these investors, they're like herds, right? So they all talk to one another. You have pension fund conferences and all these kind of things, and they're not going to make a decision in a day. Some of them make decisions quicker than others. The ones I talk to can do that a bit quicker. Others take months and quarters to make those decisions. So I think we're going to start to see that more and more, and that is also why what you're seeing here in the chart, and this is really, the one of the top three things I want to talk about quickly as we go through the notepad. This is just the sector performance of the S&P, and it's just a reminder that sort of the higher octane, cyclically exposed sectors, particularly tech and consumer discretionary, are the ones that are most notably underperforming this year. Tech is still down 10% on the year, consumer discretionary down 12%, and the stuff that's defensive traditionally through sort of textbook 101 is utilities and staples. And so, could we see a continuation of that for the remainder of the year? It's a bit much to say right now. I don't want to extrapolate that far, but I don't think this picture should change a heck of a lot. I think that the more defensive posturing, one second, is probably going to continue, and I don't think that's over. So that's one thing that we're watching, and I just want to, there's a lot of talk of by the same clowns that on TV that have been saying this for 15 years because they've never seen a cycle of V-shaped reversals, and I don't want to name names, but it's just unbelievable the stories they're spewing. Because it's just an easy story to spin, and if they're wrong, it's not that bad. Like it is, obviously, but they don't think it's that bad. And if they're right, they're right, right? So, but that's not really risk management. That is purely narrative and storytelling, and it's not really how you can manage money. So I would encourage everyone to get a process that you can follow. So that's number one, just a little bit of perspective on that. Next thing I want to do is I want to just quickly review the chart that we had a lot of feedback on yesterday. Just a reminder, just very simple S&P levels. This is, again, overly simplistic, but I do think it kind of paints the picture where we are, what I just basically mentioned in a whole bunch of words before in one simple picture. And so if we think about this through the lens of investor psychology, there's a lot of people, people that just go with narratives and follow what their neighbors are doing or what the news headlines are telling them, that essentially bought or doubled down on stocks, U.S. stocks, mostly tech, because of that's where the balance of the allocation goes to in any stock allocation, and they're really what I refer to here as trapped buyers, and they were promptly faced with in S&P terms a 20% drawdown, and so I think there's a lot of trapped buyers up there, and 20%, and now you've got the tariff story that runs both on Fox News and CNN. Doesn't matter what political thing, it's just there. It's in everyone's mind. And so I think people are going to be more prone to maybe clip some of their over allocation in stocks if they even realize they have that, as we start getting into this area here between 550 and 580. And so that to me will be natural resistance through the lens of positioning, psychology, which is all kind of the same thing, really. Now, what could get us to 570, 580 on the SPY or 5,700, 5,800? I would imagine some sort of a trade deal with someone, or at least a partial deal. Again, I don't know, India, South Korea, whatever they seem to be closest to. Just that's what Besson keeps saying. So I'm a bit hesitant, going aggressively short until we get past the next, week or so, once we get past tech earnings and again some of these potential trade deals that are kind of being floated out there as being within days or so ish of potentially getting announced, or at least like some sort of a partial announcement. So that's kind of how I'm navigating this here right now. The third thing I want to go through gold and silver and uranium and copper in a minute. But I do want to just quickly remind everyone that we do have those Max 7 earnings. Just, they are happening this week. So just as a separate line item, don't forget that, right? Those have the potential to move markets. And, I just think, again, when I talk to people, there is a reluctancy to go actually net short with sort of the more active community, because they think there still is that risk of, again, not only earnings, but what I just mentioned again from a headline perspective on the tariff front. that's that. Now, what else? Well, I'll give you a few stocks, and then we'll go. Actually, just one stock, and then we'll go into. I want to give you an update on gold and silver and copper. Um, Alibaba. We got a lot of people asking us about this stock. Once again, I still think it's well positioned. You know, you're looking at a lower PE, you're looking at people diversifying. It's not like China's going away. I realize their birth rate sucks, but it's still a very profitable business. And ultimately, you know, if we come to some sort of a tariff agreement at some point, this company is not going anywhere, right? So even if it's just flows and let's say some large pension fund or sovereign fund in the world starts to take a few percent out of their max 7 and allocates it more globally, then you have a natural bid in something like Alibaba. So I think that's, to me, that's a stock that's very serious to look at. Uber as well, by the way. I'll quickly give you guys the Uber chart. I mentioned this one, I believe yesterday, real quick. I need to see Uber get, you know, above sort of 85, just get out of this zone. Maybe it's robo-taxis. As I mentioned yesterday, they're using the Volkswagen technology on robo-taxis, which is not something that's on a lot of people's radar. So that's another one. This could be a super app. So that's that. Now, in terms of gold and silver, I still think that gold is in more of a sort of consolidation phase up here. I don't think it's going to start making fresh all-time highs again as strongly as it has. Maybe it revisits those highs. It's possible. Long term, I'm very bullish. Even probably in immediate term through multiple quarters, I'm bullish. But I still think we have the potential to be kind of topping out here. I thought that price action last week was very telling. So we are contemplating some options bear call spreads, and quite the opposite actually in silver, which continues to hold up very, very well. Industrial metals, so you know, maybe some sort of a news on the tariff front. Again, I'm speculating here. I don't know. Could get this moving. In fact, just before we came on air about 25 minutes ago, it had a nice jump, and then there was this, you know, Besant and Amazon headline, you know, 15 minutes ago that pushed it right back down. But I still think there is something there. And then the big one that a lot of you guys that are part of Heat Seeker, which are really just getting started, you know, I mean, if you look at copper, you know, everyone hated copper. It dropped very sharply, but copper is actually now rallied, you know, 19% off of those early April lows. So if you look at it in a weekly chart, it's much more impressive. You can kind of see that we're really just right back to more or less where we were in March. So, you know, there's clearly a bid in something like that. So that's copper stocks. In fact, if you look at this last chart, if you look at the performance of CPER, the ETF, and their stocks with that, it's actually still up 21% on the year, or it's once again up 21% on the year. It was up as much as 30% on the year, and then actually ended up giving up most of those gains away. We end up being up 2%, and now it's back up again to 21%. So if you're looking for something volatile to trade, number one, interesting, and number two, if you're looking for an investment, obviously not advice here, but you know, we have a really believe in copper in the story. There's no way we can do any of the energy things that we want to do without copper. So you guys have heard me talk about this, and we'll continue talking about it going forward. So quick and dirty here this morning, 12, 13 minutes here. We'll keep it at this. If you guys have any questions, let us know. There's one stock that I really like in the losing my thought process here. In the energy natural gas space that we are going to talk about in trade ops and as well as an Inner Circle Market Over member session here in just a couple of minutes. I'll see you guys over there and back here tomorrow morning at 9 Eastern. Have a great day, and we'll see you soon.